Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. Today's session, we are going to have our discussion on two topics. One is on duty drawback, another is on refund under Customs Act. These two topics are important for two reasons. One, from examination point of view, you have a mandatory question for 5 marks from this particular chapter, either duty drawback or refund under customs law. Second reason why it is important, practically, once you are handling the cases of import and export transactions, one other occasion you would definitely come across this particular topic called duty drawback. I don't know how many of you have experienced this particular topic called duty drawback when you would have been doing your statutory audit or some other tax audit. There would have been some portion of income shown under miscellaneous income on the revenue side, where they would have said that duty drawback on exports, incentive received on goods exported out of India. So this is a topic which is connecting that particular portion of your exposure on account of money received for activity done by a manufacturer. So students, before we start with our today's discussion as a protocol, let me have confirmation from some of you towards the audio, towards the video, and also the presentation visibility. Once I have a confirmation, students, I'll go ahead with my today's discussion. And for your information, today's material has been hosted on the ICAI website. Please download this particular PPT along with the Excel file which has been enclosed. Good. Thanks for the confirmation. Now, let me start with my today's presentation. Today's session, we are going to have a discussion on what is meant by duty drawback, what we understand from this element called refund. I'll take you through for having a clarity why this duty drawback has to be studied and how it works. We'll understand in the process of this duty drawback what sort of documentation, what sort of practical aspects have to be taken into consideration, rules and procedure in connected with my duty drawback. And also, I'll make you understand what is this concept connected with the aspect called refund under customs law. Let me come to my Excel file to give a better clarity. So we will have a macro perspective to understand what is my duty drawback and what is my refund. Now, refund, as every one of you understands, refund is a policy matter where government gives back the money paid as duty or tax. So in case of my money which was paid as duty or tax, government gives back this particular money to the person who has paid tax. There could be a occasion where by court decree or a decision, amount entitled as refund to the applicant or appellant. We would have seen circumstances where someone would have filed a case in a particular forum. Could be appellate authority, could be tribunal, could be your high court, could be your Supreme Court. By way of a direction, a judgment, an order passed in particular forum, the applicant who has filed that particular application will be entitled for something called as a refund. Third scenario, where the activity of levy challenged or set aside by government. There could be scenarios where we have studied something called anti-dumping duty, safeguard duty, protective duty. So government of India may impose a particular duty. At a later point in time, the parliament would have not ratified that particular notification. They would have called back. So that point in time, any recovery made would have been paid back as a refund to the respective person who has paid that particular duty or tax. These are few examples where we can think of a refund coming into existence. Duty drawback. Scenario of imports where goods imported or re-exported. There could be a situation where someone would have imported a particular article. This particular article, after reaching their destination, they would have seen that I have ordered for part X, but the supplier has given me part Y. So I have no use of this particular material. I would return back. Or scenario could be there, goods imported and found defective after a certain point in time of usage. Now, there could be a scenario where, say, I have imported a laptop. This laptop has not been functioning well. There has been some sort of teething issues. There could be some sort of operational issues. So you are not comfortable with that particular goods. So what you do? In the process of usage, you will try to get a service done. You notice that there is no improvement on the particular article and it is of no use for you. So you would like to send it back to the person who has sent that particular goods to you. Third, government may incentivize the manufacturer or producer of goods by what you call rebate of duties and taxes paid at the time of import. You would have seen in some situations where the government of India would come with a particular proposal, would come with a scheme saying that, look, whatever taxes you are paid, which are used in a particular process, and those goods which are being exported out of India, I'll incentivize you by way of giving you something called rebate. Rebate of the element, the portion of duties and taxes on those goods which have been purchased for your manufacturing activity. Why do they do that? You would have seen this foreign trade policy. Foreign trade policy, we have the next topic. This Saturday, we will discuss on this. Government of India tries to look at your international trade. They come with a particular policy saying that, look, I would incentivize a particular manufacturer by doing a particular activity. You do an export, there is a money which is getting released in foreign currency. You do transactions with a particular nation, we are going to get inflow of some sort of revenue and also resources for doing this particular activity, creation of employment opportunities. So there could be various reasons why this particular government would come with a decision to incentivize a particular dealer, right? Now, these are some of the instances for us to understand what is an import, what is an export. What is a drawback, what is a duty drawback, and what is a refund. So here, I have given some of the examples for you to get a difference between a duty drawback and a refund. In the process of our discussion, we will discuss a couple of more examples for you to understand. Now, to set a dialogue, to set a tone for today's discussion, students, you need to understand that duty drawback is concerned with some of the activities. Refund is concerned with only few of the activities. Duty drawback has a dominant role, has a wider exposure in terms of coverage compared to the aspect called refund under customs law, right? So this is the basic thin line of difference between your drawback and refund. Now, both the cases, what is happening? The person who has paid the tax is getting back that particular tax. Both the cases, the situation is different. The transaction is different. But in both the cases, a person who has paid that particular tax or duty is getting back that particular element of tax or duty. Now, this is a broad coverage for today's discussion under refund and your topic called duty drawback. Now, backdrop, back end of duty drawback. My duty drawback is a mechanism where the duty is paid on goods imported. So whenever I have goods which are imported into India, these goods are subjected to some element of duty. And consumption of such goods may or may not happen in India. These goods which are imported may get consumed in India, may not get consumed in India. Example. Sir, I have brought this material for the purpose of manufacturing related activity and have cleared those goods into domestic tariff area. These goods have been put to use in a domestic tariff area. Alternatively, it may so happen that the goods which have been imported are not consumed, rather they are exported back. Why they are exported? Sir, I have imported the goods. I got an order for that particular consignment. I have exported back. Sir, I have imported the goods. These goods are of some sort of defect. So I have to export back those goods. So these goods which have been imported, on which duty under section 14, read with section 2, has been paid, those goods may get consumed, may not get consumed. When I do a re-export of those goods, so what is happening here? The goods which have come to India have been re-exported due to reasons which are to be listed in the subsequent slides. So when the re-export happens, students, please keep in mind, my re-export may happen in the same form, that is, as it is, or some other form. Now, sir, I have received a machinery. This particular machinery has come in a CKD. Now, what I have done, I have assembled that particular machinery, and in the process of using, some of the parts are not functioning. Sir, I have received a particular tool. This tool is of say 10 mm. This tool I have cut into 2 mm 5 pieces. Now, this tool I have put into heat treatment. When I am doing the heat treatment, I found that there is a breakage in the tool. Now, what happens here? When I do a manufacturing of a tool, there are certain processes involved. I cut the tool, I heat the tool, I send it for blackening, I send it for precision. So in the process of heat treatment, that particular steel rod got a particular breakage. So I noticed that it is not usable. So when I export the goods, it may be in the same form, it may be in another form. Goods imported for use in the manufacture production at a later stage, goods are exported. Now, this is a case where I have duty which was paid at the time of imports, that is my raw material, my consumables, or other tools. This particular duty would have been suffered, and these goods are exported in processed finished stage. In also addition to this, I have something called baggage. Sir, I've had tourist. I'm a tourist. I'm coming from Singapore. When I'm coming from Singapore, I have brought a bicycle for my usage. So there is a tourist who is coming from Singapore to Goa. When he's coming for a personal trip, what he felt, let me enjoy my personal trip. Part of his baggage, he has bought a bicycle, which is worth around say 1.5 lakh. Now, when the bicycle has come for entry, we have read the other day, 15,000 was the value of goods, duty free, there is a permission. So this tourist who has brought his bicycle, whose value is 1.5 lakh. Now, he's not going to stay in India. After a period of 2 months, this particular tourist is going to go back out of India. So where a baggage provisions are applicable, goods are temporarily imported into India for use in India at later point under section 77. Under section 77, there is an entry of those goods declared to the customs authority saying that, sir, while coming from Singapore, I brought a bicycle. I'm taking back that bicycle along with me. Now, what happened here? When I brought that bicycle to India, there was a levy of customs duty. Why? Because there was a duty-free allowance of 15,000. But the value of my bicycle is 1,50,000. So I have paid duty. That particular bicycle, I'm taking back along with me as a baggage. Now, again, the government of India says, look, I'll give you back this particular amount of duty called as duty drawback, right? These are the reasons why we have this mechanism of duty drawback, which comes into existence. Yeah. So this is overall basic view why duty drawback comes into existence. Now, under Customs Act 1962, they have said, look, we have identified few scenarios. We have defined all sort of permutations and combinations. And as of today, these are two provisions connected with my duty drawback. My duty drawback could be under section 74. My duty drawback could be under section 75. In connection with these two provisions, Government of India has formulated rules to regulate how this duty drawback has to be calculated, right? So what they say, this duty drawback, I would call as a rebate. When I say rebate, in tax laws, the government nomenclature, they use a term called subsidy or a rebate. When I use a term called subsidy, when I use a term called rebate, this is a particular practice where the government of India, the particular administrative wing, gives back the incentives to the manufacturer, to the businessman. So here, my customs law has defined this particular activity of duty drawback as a rebate. What is that? A rebate of customs duty paid on imported goods, which in turn get exported out of India. So there was an existence of a condition that, sir, I have paid customs duty. I have paid customs duty. When I have paid that customs duty, and those goods which get exported out of India, right? Example, we were talking about this bicycle. A tourist who has visited from Singapore, he has made a cause of entry of goods into India. So what happened here? When he's coming into the premises, that territory of India, assuming that he's coming by a flight, he has to make a entry under section 77 for declaration. This particular entry will be given to this particular pilot, who in turn gives the intimation to the proper officer under customs. So this particular bicycle, when it is going back after that visit, since this bicycle is going back as a, it is deemed to be export, a baggage which is being exported out of India, what they say, there is a duty drawback of two kinds under section 74, under section 75. What they say, my duty drawback under section 74 is repaid back to exporter when imported goods are re-exported as it is. And article is easily identifiable. So my section 74 says, look, Praveen, you have imported a laptop. You have imported a particular machinery. This laptop or this machinery is sent as it is. So when I say as it is, indication that there is no change of mechanism. Another example. Sir, I have imported a pen. This pen, I cannot do anything. I'll just try to apply and I see that this pen is not working. I'll return back. So the form in which it has come, the form in which it is going back, I can easily identify. Then I apply my provisions of 74. 74, where identity is established. Now, in the case of a tourist, when a tourist is bringing a bicycle, now some sort of identity will be there. Probably customs officers will take a picture saying that, look, you're a tourist, you're coming with a bicycle. Assuming for a minute, he has come with a bicycle of brand A. While he's going back with a bicycle of brand B. Now the matter comes for examination. Look, you have come as a tourist. When you are visiting into India, you have come with a cycle called brand A. But when you're going back, it was not brand A, it was brand B. So in that case, they'll say, look, I cannot give you a duty drawback. I cannot give you the duty what you have paid at the time of import. So for me, first condition is section 74. The goods are exported as it is and the article is easily identifiable. Now take example of laptop. So when we get a laptop, there is something called part code. There is something called service tag. So when I look at the laptop, the service tag which was there at the time of entry, the laptop which is going at the time of returning back, it is same. There is an identity established. So this case, I go with my section 74. Second scenario, duty drawback under section 75 is granted when imported material, look at this term, imported material are used in the manufacture or processing. So I have imports. These imports have to be used. Sir, how do I use this? I use this material in the process of my manufacture or processing in India, and such goods are then exported. So this activity, I call this as an activity. This particular activity, where it should happen in India. And post that activity of manufacture process, those goods are exported out of India. I'll give an example. Sir, I am a manufacturer. What I do, I manufacture something called acoustic enclosure. For you, most of you don't know this acoustic enclosure. Look at your ATM machine. My ATM machine has got a box outside. This particular ATM machine has got a machine inside. So what you see, the exterior, the outer box, that particular box is called as acoustic enclosure. So what do I do with this acoustic enclosure? I use this acoustic enclosure for putting it into I keep a machine inside this acoustic enclosure. Why I do that? To protect the machine. So for a moment, assuming that I have to prepare this ATM machine. So the machine is manufactured in Singapore. And this particular machine comes to India for the purpose of assembly into an acoustic enclosure. So why it has come to India? The cost of this steel and the activity done on that particular box is economical to manufacture in India. So what happens here? When this particular machinery has come, I manufactured an acoustic enclosure. I have inserted that acoustic enclosure on this machine. I did the internal cabling, connecting the control panel, and I made finished ATM. This finished ATM, when I plug in, it functions on its own. So I have got an engine. To that engine, I added control panel. I added some cabling. I also added some sort of programming electrical chips kind of thing. And I prepared something called ATM. So here what they say, a drawback. So when I have imported this machine, the ATM has got a hardcore thing called machine. So when I have imported that machine, I have paid customs duty. Don't worry, because this machine was used in this ATM, when the ATM is going out of India, I repeat, when this ATM is going out of India, this duty, what you have paid on this particular machinery, I can claim as a drawback. Under what section? Section 75. So first case, identity can be established. Second case, can I establish an identity? So engine which has come, I have assembled into ATM machine. When this ATM machine is going out of India, customs officer cannot verify the identity for the reason this machine is locked up into the box. I have to open the box. I have to open the machine to look at its identity. So in the case of section 75, identity is not easily, identity may not be established. So for that reason, 75 has not stressed upon your identity. So this is a starting point for you to understand, students, right? So as of now, for duty drawback, I was governed with two provisions, 74, 75. 74 as is where identity is there. Example, you can make a note, bicycle by a tourist. Section 75, you can make an example of note, you can make a note of ATM machine which is manufactured. Now, before I go further, let me just see if there are any questions so far on the discussion we had. There's one question from Sairam. Sairam is asking this question. Sir, why is this refund is treated as a miscellaneous income? The refund could have been treated as a miscellaneous income, Sairam. Let us take this example. Sir, I have paid anti-dumping duty in the month of February 2021. This particular anti-dumping duty which I have paid, I have considered this as my expenditure. But however, I noticed that my commodity on which this particular anti-dumping duty is paid is not at all classified under that entry. Subsequently, I'll file a refund application and the department notices that whatever anti-dumping duty was paid is not actually recoverable for this particular commodity. Let's take example. So there is a steel, there is a term, technical term used for steel bars. In case of a trailer, when I manufacture a trailer is a chassis kind of thing. I need to have some steel bars. If I have imported a steel bar, which is not connected with the trailer, if I have imported a steel bar, which is to be used as a regular process. Now, anti-dumping duty was imposed on trailers, on steel products, which are used for manufacture of a trailer, which are imported from China. I also imported a steel bar, which is not connected with the manufacture of a trailer. Then I would go back to the customs authorities and say, my dear officer, look, I have paid this particular duty, which is not to be classified under this entry for levy of anti-dumping duty. The government feels that, yes, levy is not appropriate. They refund back that particular money. So I have booked that as an expense. Now I have to book that as an income to nullify this particular transaction. Right? So that could be a scenario where I could call that as an income in relation to refund. In other cases, sir, I have paid duty of 2 lakhs instead of paying 20,000. Now that case, I wouldn't call that as a miscellaneous income. I would park that excess remittance in my balance sheet as a current asset item. A good point of understanding, Saira. This particular aspect, I'll give you a little more clarity when I come to the topic called refund under customs law. Probably this accounting exposure and also treatment in the books of accounts with this small learning called unjust enrichment. I'll come in a while to make you understand this particular aspect. Now, duty drawback on re-export of duty paid goods. So here, to start with, section 74 discusses on a drawback scenario where re-export of duty paid goods. So I have imported the goods. At the time of import, I was asked to pay the duty. I have paid these goods which have been re-exported. So for that, there are provisions connected to understand. What it says, when the goods are capable of being easily identified, I should have a scenario where goods should be easily identified, which have been imported into India and upon which any duty has been paid on importation. So first activity, sir, I have imported into India. Is that sufficient? They say upon which any duty has been paid. Now, payment of duty is very, very important. There could be a scenario where the goods have come to the customs area. Those goods, I have not filed a bill of entry for home consumption. Rather, I have taken a permission to put into bonded warehouse. From bonded warehouse, I made a transaction to another party by way of transfer of title to goods. So A has imported the goods, A sold to B. B in turn sold the goods to C. C has exported those goods out of India. Now, from bonded warehouse, the goods have gone out of India. When it has not touched the landmass, when it is not entered into domestic tariff area, so where is the question of duty payment? Now, this is what they say. The goods should have been imported into India on which my duty has to be paid on importation. So what they say, if these goods are entered for what? For export. The goods which have been imported, they have come back for export. And the proper officer makes an order permitting clearance and loading. So what happened here? Let's take example of a laptop. Sir, I have imported a laptop in the month of June 2021. I have used this laptop in June 2021. I have noticed that there is some sort of heat. They have given some tests remotely. I did all the performance. Time has passed. July has also come. In the process of my using the laptop, I have noticed that some sort of operating, your OS is not proper. System gets rebooted on its own. Now, this laptop, I have not been happy. I have said to the supplier saying that, boss, please take back your laptop. So those goods where there is an identity and those goods which are entered, where does this entry came? It has come to the customs area. For what? For export. And this proper officer has given a permission. He has passed an order. Let export order, LEO. So these goods have entered for export. Or these goods are to be exported as baggage. Now, this term of baggage, whenever I use the term baggage, please remember the example of a bicycle. These goods are exported as a baggage, and the owner of the baggage, for the purpose of clearing, makes a declaration under Section 77 to the proper officer. Students, please keep in mind, Section 77 is a very, very effective mechanism where a declaration is made by a person. This person could be an Indian origin. This person could be a foreign origin. So what happens under Section 77? We have discussed the other day. Say when a husband and wife are traveling abroad to Canada for employment related activity. So what they do, they declare that these are my personal belongings. These are, now personal belongings excludes your jewelry. So I have to declare that, sir, I'm taking with me so-and-so clothes. I'm taking with me my laptop, my notebook, and the basic regular usage. Also, I'm taking articles along with me. So when I make a disclosure under 77, when I come back into India, my point of exit, my point of entry, my both Section 77 disclosures will be compared to say, what is the additional items you have brought? Those additional items I'll compare. Is there a duty-free elements under Rule 3, Rule 6? So this is how I examine for baggage. And such officer makes an order for permitting clearance of the goods for exportation. So here they have used a term called order. Whenever a proper officer passes an order, There was one question which was asked by Namita in one of the classes. So what if the goods are imported, which are what do you call prohibited goods, which are not easily permissible. Whenever an order is passed, the officer examines, is there a restriction? Is there a condition for exporting those goods? If there is no condition, if there is no restriction, then a proper officer passes an order. So this is the importance of the term called passing an order. Now, please keep in back of mind, whenever an order is passed, just like that, the customs officer will not pass an order. In the example, this one movie in South India, I don't know, but like how many of you have seen this particular scenario? There is a check post between two states. There is a check post. At the check post, the officer in charge verifies the vehicles which passes through the check post. Every time a passenger, a particular person comes on a particular vehicle, when he comes on that vehicle, there is a bag on the vehicle. This particular proper officer has a suspicion that the bag has got some suspicious items. It could be smuggling, it could be some unauthorized items. So always when the vehicle passes through the check post, he asks the particular driver to open the bag. When the check post officers open the bag, there is a sand within the bag. Sand which is used for your construction activity. So like say day one, when he has come, they open the bag, they saw it is a sand. Nothing is there in the sand, they send this particular person. After a week, again the same person comes with the vehicle, again there is a bag. The check post officer again asks him to open the bag. And when they see, it is a sand. This happens for 4 times, 5 times. Every time he comes, the proper officer stops and says, open the bag. Now, at some point in time, the check post officer gets exhausted and says, yeah, something is wrong. Every time I ask you, you give the same answer. What is there in the bag? You say it is sand. When I open the bag and check, nothing is there. Why is that it is happening that you're going and I'm not finding anything? Then this particular driver of vehicle owner says, you're a Buddhu for the reason when I came with a vehicle, you never asked, where is the C-book? Where is the driving license? Where is the passbook? When you notice that I came with a suspicious dress, I came with such a attire that something is wrong in the bag. So always with this preconceived notion, you're focusing only on the bag. You never notice what is the vehicle I'm coming from. Day 1, I came on TVS. Day 2, I came on a Hero. Day 3, the third occasion, I came on a Splendor. Fourth occasion, I came on some other vehicle. Every time I'm changing the vehicle, you never looked at the vehicle. You only looked at the consignment. That is the goods. So this happens in case of passing an order. In case of a baggage, the proper officer thoroughly examines for identity. You've imported, for a moment, bicycle is of a Hero bicycle. When I'm going back, instead of Hero bicycle, assuming that this is a Punter brand. Sir, I have brought XYZ brand. I'm taking back PQR brand. Now, that is the occasion where they try to question, is this a cycle in the same fashion? Third, these goods are entered for export by post under the proper, and the proper officer makes an order permitting clearance of those goods for exportation. Now, this entry of third element by post, this is a little important for the small time business people. Now, COVID actually opened up a plethora of operations, plethora of opportunities for businessmen, small time businessmen. Sitting at your residence, if you have a good art, you're a good painter, what you can do? You can do a particular sketch. You can give a particular finishing to a particular picture. Say someone is very good in making innovative painting. What is that innovative painting? Say you wanted to have your birthday or your marriage or some other occasion. You give your pictures and say, this is my occasion. Using your art, you would draw a picture with a background with some sort of items. Now, those items are very, very attractive, where looking at that picture, someone does some decoration or setting up a stage to match with that picture. This is an art. Now, assuming for a moment, someone says, look, this is my daughter's picture. She's having her 10th birthday. These are the pictures. So please, based on the pictures, give me some sort of suggestion where we can come with the decorative stage for her birthday party. So this particular painter, who happens to be hailing from Tamil Nadu, she does some sort of paintings and she wants to export those paintings. Those paintings may go through courier, may go through post. So when the items come for your post, that is a point where, so what if the goods have come with payment of duty and those goods leaving out of my postal area? So this process involves where they make a package saying that this is meant for duty drawback. Again, the customs officer verify what is the time limit, what goods have come, how these goods have come, and then after examination, they will let it go for export purpose. So these are the three occasions where they have come, said that when the goods which have been imported, where there is an identity established, then 98% of such duty shall, except as otherwise provided, be paid back. So what they are saying, the goods which have been brought into India, on those goods, whatever duty you have paid, I'm willing to pay you back 98%. So what if I have imported a bicycle? On this bicycle, I have paid a duty of 10,000. When you take back this bicycle out of India, you are entitled as a duty drawback of 9,800. So what happens to the balance 200? It's a policy decision that I'll not give you 100% duty as a drawback. I'll give you only 98%. So can this amount be reduced? Answer is yes. We have a couple of subsequent slides to answer. However, the law says that under section 74, my entitlement is 98% of duty what I have paid. Whatever duty I have paid, this duty I can get back as a rebate. How much? 98%. So this is my starting provision under section 74. Now, there are a few conditions, like every time when the government comes with a particular incentive, comes with an exemption, they always have a conditions attached to that. What are those conditions? Point number one, the goods are identified to the satisfaction of AC or DC of customs as the goods which were imported. So they say that, look, you have imported the goods. At the time when you have imported the goods, like when laptop has been imported, you never had any intention that you will send back this laptop. But the proper officer, the concerned proper officer, who happens to be the AC or DC, what they say, you establish the identity to the satisfaction. They have to satisfy themselves saying that, look, this is a particular laptop which has come. This is a particular tag. This is the identity which is there. So this particular laptop, when it has come, sir, I'm sending back the same laptop. So what has to be done? I have to establish an identity. For that, I, as an importer, I, as a person who has paid the duty, I have to prove to the satisfaction that there is a connectivity, there is a comparability, there is an identity which has been established. Right? This is the first condition. Those goods have entered for export. Those goods have entered for export. How? Within 2 years, from the date of payment of duty on importation thereof. So everything, as I say, there are certain conditions. So the second condition, they say that, look, from the day you have made the payment, that day, please ensure that within 2 years, the goods have come for export. So what if I go beyond 2 years? They say you are not entitled for duty drawback under section 74. So why 2 years? Why not 5 years? Why not 3 years? It's a policy decision. I cannot challenge the policy of a lawmaker. So they say that any goods which are imported please bring it back within a point of time in 2 years. On the importation thereof. So is this applicable for all the goods? Some sort of exceptions are there. When we travel further, you'll see those exceptions down the line. If exceptions are not specifically mentioned, please presume that I have a time limit of 2 years. However, in any particular case, the aforesaid period of 2 years may, on sufficient cause being shown, be extended by the board by such further period as it may deem fit. As I say, this 2 years may be extended on sufficient cause being shown in a particular case. So I have some cases where this 2 years may be 3 years, this 2 years may be 4 years. Take example, ISRO. Some particular component which is to be used in a rocket manufacture, the goods have been imported. When the goods have been imported, assuming for a moment, ISRO have imported, caused the movement of goods, import of goods with payment of duty. Or like most of the cases, defense ISRO, they clear the goods without payment of duty. Let's take an example. Sir, I am a private manufacturer. I do a manufacturing activity of circuit designing. For doing this circuit design, I need to have some electronic components to be imported. This circuit, once I have designed, I'll give it to ISRO for use in rocket launch. Now, as you're all aware, this rocket launch has got a process where it takes more than years to get the success, to get the desired outcome. Now, that could be the case where I could get a permission beyond period of 2 years, where the board, when I say board, Central Board of Indirect Tax and Customs, they give a extension. So this particular conditions, as of now, 2 conditions are there. Very, very simple condition. First condition, I have to establish the identity. Second condition, these goods which have been imported should have been exported within a period of 2 years. How? From the date of payment. So far, so good. I've understood everything. What else I have to do in relation to this exports? When it comes to the aspect of Section 74, establishing identity, whatever I have said theoretically sounds good, but practically, this particular documentation is very, very complicated, very tough. Reason, most of us, if we have a prior experience, prior exposure, we will take care of entire documentation. So what if I'm not aware that when the goods have come, like example, so I have imported a monitor, say a particular LG or Samsung. Now, these goods could have been manufactured in Korea, Singapore, or Indonesia. So I have a cousin of mine who is in the Singapore. This cousin has recommended to buy so-and-so particular monitor to be used for my presentation. What do you do? Sir, I'm an online trainer. I do online sessions. I have my students abroad, all different locations. What do I do? Sir, I'm a coder. I do train the students on coding. I teach them on particular coding activity. For this particular online classes, I have imported a particular monitor which is worth, say, 2.5 lakhs. This monitor which has come into India after some point in time, I noticed that this is a small dot which is, the color is getting faded because of a small dot. So this particular monitor, which was promised to me, saying that it has a life of 2 years, it has got this color fading within a span of 2 months. So this monitor, I would like to send back. Now, when the monitor has come, there is nothing called identity marks. It just says that Sony brand of so-and-so length, that's all. Now, the same particular monitor, I could have purchased even in India. So what will I do? Now, this is a matter, practical issues, establishing the identity. When there is no tag name, when there is no serial number. So what if the goods which are imported has got a serial number? Unfortunately, this serial number was not there on my bill of entry. When it is not there on my tax invoice, when it is not there on bill of entry, how do I prove? How do I establish to the satisfaction of my customs officer? This is a question comes as a practical issue. In that case, there is something called inspection report. See, as I have informed the other day, there is someone called CHA. Who is the CHA? Clearinghouse agent. Whenever the goods have to be imported, where a customs duty has to be paid, a businessman or importer cannot directly just walk into the customs area for getting the goods cleared. They have to predominantly, mandatorily go through a CHA. So when a CHA files this particular bill of entry, I have to inform. So please get an inspection report. Please get a remarks for serial number, for the identity of those particular goods. Why should I do that? Reason, when an inspection is done, when a verification is done, and these goods go back, it is my responsibility. It is my responsibility to prove that particular identity. So those cases, wherever possible, please do insist to get an inspection report. Say in case of a business scenario, what I have to do? There are few agents called insurance agents. Why I have to have insurance? If something goes wrong, I have to file a case with the insurance authorities. So insurance authorities, they also call for this inspection report. Take an example. Sir, I have imported a particular car from, say, Russia. This particular car is having a value of 2 crore. And when this car was being unloaded, some particular crane has lost its balance. This car fell all of a sudden on ground. When the car fell from, say, 20 feet on the ground, imagine the tires get opened up, the engine gets opened up, the bonnet gets bloated off. Now, what I have to do? I have to get something called surveyor report, inspection report. This particular reports, there are various reports, will come as a handy for establishing the identity. So identity can be done through various reports which are available. Then relevance of date of arrival compared with payment of duty. Please remember, when I have the time limit of 2 years, this calculation of 2 years will be done from the date of payment and not on the basis of date of arrival, not on the basis of your warehouse. Sir, I could have a mechanism where the goods which are imported, I have kept in a warehouse. After 6 months, I have cleared from bonded warehouse. Say, assuming arrival happened on June 21. I kept in a bonded warehouse for a period of 6 months. Say on December 21, I caused the clearance of goods from warehouse. So when I have cleared the goods from warehouse on December 21, I would have paid my customs duty in December 21. So from here, if I have to calculate 2 years, on or before December 23, I have to cause the goods for re-export, not from June 21. This is one point you have to keep in mind. So what if my goods are partly re-exported? Now it could so happen, students, there I have imported 5 laptops. I have to export a part of a laptop, or I have imported a particular workstation which is to be used as a server. Now, most of these offices, you would have seen the CEO office itself. I have something called a server station. So when I call as a server station, what happens here? I get a desktop. I get a particular external disk. I get some sort of connectors. I also get some sort of softwares. Now, I call all of them as server station. So one of the server station, one of the component gets a malfunction. I need not send back entire server station. Only the part of the server station I have to send back. Now, it becomes a challenge for me. Reason, for a moment, assuming that there is a hard disk which is forming part of a server station, only that hard disk I have to send back. It's a quite challenging. I've imported 10 items as per my bill of entry. Only 1 or 2 components I have to send back as a re-export. Now, how do I calculate duty? So when I have imported, there was no calculation of duty part-wise. What they have done, all put together as a service station, I have paid say 2 lakhs as customs duty. Unfortunately, when I'm sending back, my seller, my exporter didn't give part-wise the duty breakup. He just gave that service station worth say 12 lakhs. On 12 lakhs, I paid a customs duty of 2 lakhs. Now, what if I'm sending one of the component? How do I calculate duty drawback? This is a practical challenge we have, even in the cases of subparts or consumables or components. Now, these are some of the challenges where you get the components as a one unit, but one of the component has to send back as a re-export. Now, those cases, if I don't have an identity, I don't have a breakup of the value, then it is very tough for me to claim a duty drawback under Section 74. So what if I have imported the server station, a hard disk was to be sent back. Assuming that I get one more hard disk. Now, under customs law, any valuation happens, but once it is coming back on that particular server, that particular hard disk, again I have to pay my customs duty. If you recollect Section 20, we have discussed something called value of goods when re-imported at a concessional rate. Now, those cases, I don't get a benefit. Reason, customs authorities doesn't have an identity to prove that part X has gone, the same part X has come back. Now, if I don't have this identity, it is very tough for me to control the duty portion. So why do we discuss all this? So why is that important for all this? You as a professional chartered accountant, you happen to be a CFO. There's something called project costing. I have to be a competitive person in terms of a price bidded to my customer. For example, sir, I have got a contract from ISRO to supply this particular, a station, the server station or a particular programming device to be supplied for 2 crores. Now I have to cap my 2 crores. The goods come to India, go out of India. Goods come to India, go out of India. Now, when this kind of cycling happens, you know that this sort of work requires goods where import and export is a regular process. Now, those cases, you as a professional advise carefully saying that, look, my dear exporter, please mention part-wise the value. Please give a breakup. Why? If any one of the part has to be sent back, I have to ensure the duty drawback where I have to give a satisfaction to the officer concerned, the identity, the value, the duty to be paid. For all these reasons, when someone looks at bill of entry, there is a line-by-line entry for the goods which are imported. So this is the reason why I have a duty drawback under Section 74 to be established at item level. Now, let me see if there are any questions before I go further. Vidula is asking this question. Octroi used to get collected on such checkpost, NACA. Yes, Vidula. There was a kind of point where movement happens from one particular post to another post. Octroi generally gets levied. Now, what if the officer is focusing only on the goods but not the vehicle? The value of vehicle is worth few thousands. The value of that article may be petty hundreds. So this is how the smuggling generally happens without the knowledge of a proper officer. There's one more question from Sairam. Sir, whatever we re-export goods back to the supplier after that, supplier exported back the replace of that product, can we pay again the duty on that product? That's what I was telling you, Sairam. Please come to page number in your institute material. Come to page number 1.13. Goods other than those falling under serial number 1 exported for repairs abroad. Look at the other column called amount of import duty payable in page number 1.13 side. Duty of customs which would be leviable if the value of re-imported goods after repairs were made up of their fair cost of repairs carried out including the cost of materials used in repair. Insurance, freight, both ways. So what happens here? If the goods are sent and brought back, the cost of transportation, the cost of insurance, the cost of repair, all this cost notionally have to jack up for computation of duty. So this is a relevance item where I was referring to my section 20. We as a businessman have to keep a track of those items coming to India, going out of India, again coming back to India. Identity of going out, coming back, identity of those goods for the value, identity of those goods for the repair, which was coming as a value addition by your exporter. This is the relevance side. Now, let's move further. Drawback on goods used before re-export. So there could be a scenario where you are saying that my drawback is entitled for 98%. Now, what if I've used the goods for some point in time? You have given a time limit of 2 years. Now, imagine, sir, isn't it a provision where there is a loss of revenue to government? I wouldn't call this as a tax evasion. I wouldn't call this as a tax avoidance. I could call this as a tax planning. It's a legal mechanism. Sir, I have to do a particular demonstration. I have to do a particular repair. Take an example. Calibration. Now, most of this manufacturing industries, they have to get the machinery calibrated. They pay lakhs of rupees. Now, there is something called ISO certificate. The organizations who give this ISO certification, they are sophisticated organizations. They have these instruments where they use it for calibration. So whenever this ISO certification is done, they do some sort of test parameters. Based on test results, they say, yes, this is having a fitment. This is having a so-and-so standard quality. So what if for doing this particular calibration, for giving this ISO certification, I need to have an apparatus. The value of this apparatus is worth, say, 50 lakhs. I cannot afford to buy that apparatus. I get into a contract with a main manufacturer. What does the manufacturer do? Manufacturer gives me on a lease basis. I import as if I'm an owner. I use it for 2 months. I send it back. Now, for me, the credit period is 60 days or 90 days. I import that machinery for 50 lakhs. I use it for calibration. Once the calibration is over, for me to issue a certificate, I export back. What do? So this machinery is not in a good condition. This machinery is having some malfunction. I'm sending it back. I don't pay back that 50 lakhs. Rather, what I do, my this particular manufacturer is sending the tools. He recovers from me some 2 lakhs or 5 lakhs. Now, I could save my duty. How much I can save? 98%. Now, in this case, goods are being used. So what does my section 74 say? Where the imported goods are used after importation, the amount of drawback will be at a reduced rate. Now, government also has seen this practice. Don't think that we are smart as a professional. The businessmen are intelligent. Even the customs, even the government officers are intelligent equivalently to you. What they say, look, because the goods are used, I'll give you at a reduced rate. Another example, this bicycle which was brought by tourists, assuming that this is a bicycle which has got some sort of features where it could be given on rent at Goa beach. Now people have gone for holiday vacation. They are fond of this imported branded bicycles. Now this imported branded, there are a few people who cannot afford to pay 1.5 lakh, but they can afford to pay 10,000 as rent per day. Now what happens here? I import this branded cycle. I import as a baggage. I give it on rent for 10 days. 10 into 10, 10,000 per day. 1 lakh I'm going to get back. After a week, I'm going to take it back. Now, this is a routine cycle. Now, sir, isn't it a benefit where this fellow foreigner is coming to India, is paying customs duty, while going back, he's claiming as a duty drawback. Now, they say goods which are brought to India, which are imported to India, which are used, the amount of drawback which I'm going to pay will be at a reduced rate. I'm not going to pay 100%. That is 98%. A fixed, this rate is fixed by central government, having regard to the duration of usage, depreciation in value, and other relevant circumstances as may be prescribed. So as of now, this main notification 19 of 65 is a notification which talks about reduction in rates on the basis of usage. So my customs duty, I get as a drawback on the basis of the period, how much I'm going to use. The government further says that, look, these goods are not entitled for drawback under this particular route. What is that? Wearing apparel. I have imported one particular coat which is worth 5 lakhs. I have imported that particular coat for my say marriage. After marriage, I'm going to send back. Now, wearing apparel, because it can be used like, Western countries, they have this luxury. In India, we don't have this luxury. See, in US, you can buy a particular apparel for 5 lakhs, maybe say $100 or $5,000. You can use that particular coat for 1 or 2 weeks and then you can return back. The policy in the US is very, very strong. Consumer return policy. So those goods which are used, if I have to return back, they say, wearing apparel, I don't permit. Tea chest. What is a tea chest? These are the boxes which are used for storage of tea. So if the material which is imported is a tea chest, they don't permit. Exposed cinematographic film. Unexposed photographic film. If the above goods are not used after their importation into India and subsequently re-exported, then they are entitled for 98% drawback. So Government of India says, look, these 4 cases, if at all, they are used, then I don't give a drawback. If those are imported and exported as it is without being put to use, then they are entitled for 98% drawback. Now, so what is the amount of drawback I'm entitled for? Look at your institute material, page number 6.8. Look at your institute material, page number 6.8. So what they say, the goods which have been brought into India, which have been used and re-exported, based on the duration, based on the period. What is that period? Date of clearance for home consumption and the date when the goods are placed under customs for export. From the day goods are cleared for home consumption. Now here, they're not connecting with your duty payment. The day it has come for home consumption till the goods are come for export. The day it has come for home consumption till the date of export. So if it is not more than 3 months, I'll get 95%. Sir, if I don't use, I'll get 98%. I'm entitled for 98% if I'm not used. Because I have used up to a period of 3 months, this 98% gets reduced to 95%. If it is more than 3 months, but not 6 months, then this 95 gets reduced to 85. So if it is more than 6 months, but not more than 9 months, then it gets reduced to 75%. It is more than 9 months, but not 12 months, then further gets reduced to 70%. So this is how I get a subsidized, I get a reduced drawback. So examination, do I need to remember this? Answer is yes. We don't have a choice. They'll give you a scenario where goods would be imported into India, goods which have been used for a period of 14 months. So when I look at the term 14 months, I should find out Where is it fitting? Is it fitting in serial number 4? Is it fitting serial number 5? Serial number 6? Sir, I have brought the goods into India. I've used it for 10 months. After 10 months, I'm exporting back. So 10 months is falling at my serial number 4. How much is the percentage of duty I am entitled? 70%. So assuming I have paid 1 lakh, on 1 lakh 70%, 70,000 is my duty drawback I'm entitled for. Now moving further, serial number. There's one condition that, sir, I have brought these goods into India. I just did a testing activity. It is not used. Look at the term. Sir, if the imported goods are merely tested, though it is not used, it will be treated as used for importation. Now, the law clearly says that though the goods are not used, even if it is put to use by way of a test, they say it is deemed to be used. Sir, I have received a laptop. How do I know this laptop is working condition, not working condition? Only when I use the laptop, I would get to know. So generally, a laptop which has come, which is sent back, 98% I will be entitled. So I have been doing a testing activity. In the test itself, it has failed. When I'm sending back, instead of 98%, depending on the various months, I'll get the proportionate amount of duty. So what if the goods are more than 12 months, but less than 15 months? I get 65%. More than 15 months, but not 18 months, 60%. And if it is more than 18 months, I get nil. So you have said that time limit is 2 years. After 18 months, you're not giving any duty drawback. Why is that? The reason attributable for that, students, because these goods are used. If I've used the goods, the government feels that any goods which are used up to 18 months, maximum 60% of the duty what you have paid, I'll give you back as a drawback. If I've used beyond 18 months, there's nothing which can come back as a duty drawback. So I have done mere testing. I have not used the goods. They say, look, mere testing is sufficient for you to say that the goods have been used. Now practically questions come. So a laptop has come. I have opened the laptop. I have not used. I have written back. They say, once you have opened a laptop, it could be deemed that it is used. So how do I prove to the satisfaction of the officer concerned? I have imported a laptop of a model called 5410. When I received the box, I noticed that the laptop number says 5415 model. Looking at the model, please don't open the laptop. Send it back as it is. How do I prove? So look at this laptop. It has come in a packed condition. There is a seal, which is called a tamper-proof seal. I have not removed the tamper seal. Now you can very well ask your surveyor. Whenever generally the goods come, there is something called tamper-proof seal. This is the importance where I was talking about surveyor report. The person who is called surveyor, he will write the laptop which was imported by Praveen has got a tamper-proof seal. So when I take back for export, I prove to the customs officer that, my dear officer, my surveyor has written in his examination report that this laptop has got a tamper-proof seal. There was a picture taken by the surveyor. Now, please understand, when I pay to CHA, I pay to CHA for getting all these test certificates done, for taking a picture, examination, attaching those as a documentary evidence. So when I have proved to the officer concerned that it has been exported 5410, 5415, because there is a difference, I'm sending back. Then I'll get 98%. Once I've opened the box, then it is deemed to be used. Based on your this particular chart, they say any goods which are used more than 18 months, I'll not get a refund of that particular goods. Right? Now, let's take few examples for our understanding purpose. Drawback under section 74 for used articles. Question number 1. Mr. A has imported a laptop and during June 18 and paid duty for rupees 45,000. During Feb 22, the above laptop has been re-exported due to quality issue. Examine the drawback entitlement. This is your first question. Second question. Mrs. T has imported a clothing worth rupees 2.5 lakhs from USA. She paid customs duty of rupees 45,000 rupees, say on 2.5 lakh, assuming 36,000. After opening the package, she realized that the cloth is of not desired pattern and she sent back. Examine the drawback entitlement. Now, let us have these two questions for our examination purpose. Now, first case, Mr. A, who has imported the laptop during June 18 and paid duty of rupees 45,000. During Feb 2022, this laptop has been re-exported due to quality issue. Examine the duty drawback entitlement. I'll give you 2 minutes, students. Look at your page number 6.8, read with your discussions, what we had so far. Please let me know how much is the entitlement we can claim for Mr. A. Examine and tell me how much is the duty drawback Mr. A is entitled for. Give proper reasoning along with your answer. Examination always don't say yes or no. Please substantiate with a suitable provision. I'll give you a minute. Let's discuss on question number 1. Then we'll go to question number 2. Please look at your dates period given in page number 6.8 and then give your answer. Naveen, give the reasoning, ma. Always give the reasoning. For question number 2, give the reasoning. Okay. Geeta, assuming that there is a customs duty paid, it is not one laptop, it is more than one laptop. I appreciate your point. Let us, for discussion purpose, say that this has been paid, subjected to duty. I could see answers. Naveen says for question number 1, since the goods exported after a period of 18 months, as per your entitlement, more than 18 months, there is no entitlement. So nil for A. Sairam says nil duty drawback because the period is exceeding 18 months. Geeta also says, Geeta says one laptop is permitted duty free, so customs duty is not payable. Naveen, Naveen Kumar, I have two Naveens, Naveen Prakash and Naveen Kumar. Naveen Kumar gives this answer, nil as the period is exceeding 18 months. Perfect. Now here, I cannot go for this 2 years period. I have to go because the laptop has been used, then only this particular usage, that is quality issue, comes into picture. So remember always this particular chart, now 95, 85, 75. Now there is no secret for that. You have to just remember before examination day, look at these tables, just go for exam and then come out. Post qualification, always we can open the notification, read top to bottom, and then come to a conclusion. So answer for question number 1. As per section 74, since the goods are used for more than specified period of 18 months, no drawback is entitled for. For Mr. A is entitled for. Now, in addition to this, we also can say that for re-export, my time limit is 2 years. Now here, June 18, June 19, June 20. By June 20, my time limit gets over. So further you will say the time limit specified under section 74 is 2 years from the date of duty payment. So here we will say, since Mr. A has exceeded the specified time limit, no drawback entitlement is there for Mr. A. So here, first condition, I have to see the usage. Second condition, I have to look at this term of 2 years. Since both are not met, first one itself is not met, I can very well say that he is not entitled for. Let's look at question number 2. Mrs. P has imported a clothing worth 2.5 lakh from USA. She paid customs duty of 36,000. After opening the package, she realized that the cloth is of not desired pattern and she has sent back. Examine the drawback entitlement. Now, assuming for a moment, we take the devil's advocate argument, saying that Mrs. P has ordered for, say, a pink color, but the clothing has come for green color. Can you take that stand? Look at various options. In case of clothing, can you take that particular stand? Answer based on your suitable assumptions. For question number 2. Good. I could see a couple of answers. Priya says, it's a nil drawback for clothing because it is not in the condition as imported, hence considered as used goods. Namita says, sir, if some goods manufactured in India by imported raw material, then if we test run, this I'll come, Namita. Okay, if some goods manufactured in India by imported raw material, then if test run is done on finished goods, then always manufacturer will get less than 98% as duty drawback. This is connected with section 75, Namita. Wait for another 5 to 10 minutes, ma'am. I'll finish 74 and I'll come to your point, Namita. Wait for another 5 minutes. I request you to repeat this question when I start with my section 75, Namita. P. Naveen Kumar says, for question number 2, As there is no period given, we assume that Mrs. P has re-exported the material, and as she has not used this cloth, duty drawback will be 98%. Naveen Kumar has got this answer, saying that I assume that it is exported within the span of the 2 years. And he's saying that since she has not used the cloth, drawback of 98% is entitled for. No drawback for laptop used for more than 18 months. Yes, Namita. Now, for point number 2, there's one more answer. Naveen Prakash says, apparel, it is not allowed. Now, I completely agree with both Naveen Prakash and Naveen Kumar, and also Priya, saying that in this case, for textile, as per provisions of section 74, subsection 2, there is no drawback permissible for used wearing apparel. The test of usage should be established to the satisfaction of the proper officer. Now, what if Mrs. P has put the dress and she took some pictures and then sent back? Now, we never know, right? We can argue saying that some P has ordered a pink frock, but what she has got is a blue frock. Now, looking at pink and blue, we can always say that, so what I have ordered and what I have received is completely different. But when the matter comes here is, what if though it is a wrong consignment, because P has opened that box, what is the guarantee that she hasn't used this particular textile? So for that reason, we will correlate that as long as there is no proof to the satisfaction of the proper officer that this particular wearing apparel has not been put to use, the drawback will not be entitled for. Right? This is my reasoning in relation to the time limit which they have given. Now, so there is a time limit of 2 years which you have said that the goods which have come to be sent back within a period of 2 years. At the same time, you have said that the central government may bring in some additional conditions to give this particular extended period. So here, motor vehicle takes its entry in this particular fashion. So here, special rate of drawback is allowed in case of a motor vehicle. Now, this is a international practice. Now, as I have said in one another class, we have this norms as per World Trade Organization with respect to HSN, with respect to valuation, with respect to import conditions, with respect to levy of duty, with respect of import and export procedures. So one of that particular provision is a special provision connected with the motor vehicle, where having regard to the international practice, a different percentage of import duty to be paid as drawback has been prescribed in the case of a motor vehicle. So what we have seen in this particular page number 6.8 is applicable for all goods and not for a motor vehicle. Goods imported to India by the person for is personal and private use. If the car or specified goods are re-exported immediately, then 98% of the duty is refundable. So what they say, the goods which are being imported should be for personal and private use. So if it is not for personal, if it is not for private, then I don't apply this particular provision. Why so? Reason, it is for commercial. I was giving an example. This tourist who has come with a motor vehicle, that is your bicycle. Now, those cases, because it is not for personal, is letting it out on high basis. He's making money. He's making a business out of that. Though he has paid bloody 15,000 as a customs duty, now he made 1 lakh by way of renting out. I'll give another example. For this, there are a couple of Tamil Nadu and Kerala High Court judgment where they have disregarded this personal and private usage. It so happened that you would have seen these 5-star hotels. All these five-star hotels, they have the luxury cars, Mercedes-Benz, E-Class, S-Class, all these high-end cars. Why do they have? They have this premium customers who want to ferry only on a high-end car. Example, say one of the celebrity travels from North India to South India, and this celebrity from airport, he has to attend a particular movie launch. So when he goes from the airport to the hotel, from hotel to the venue, they prefer to have this high-end luxury cars. Now, what if this luxury car was imported by the hotel owner in his personal name? Now, please understand this example carefully. The car was imported using his, saying that it was meant for personal use. When I say for personal use, it will not be having yellow board, it will be having a regular black and white. Now, when I call as a commercial, the customs duty, the road tax and the other taxes are phenomenal. When I say it is for private use, then I would pay the commercial tax. I wouldn't pay higher customs duty. All the aspects are variant in nature. I have imported the car for personal use, for hotel personal use, but I have used in the hotel. So what happens when the celebrity comes to the airport? This non-commercial licensed vehicle goes to the airport, gets picked up from various places. It goes on, and this particular car, if it is used for business purpose, they say, "Look, I'm not giving you the benefit of drawback." Now, why do they do that? There are few events, there are few celebrities, there are few luxurious throwaway parties where this kind of tactics do come in. So there could be an instance where the celebrity would get paid 1 crore rupees. The channel would pay to the event management 10 crore rupees for that particular occasion. And to make that particular celebrity happy, they would have imported a car for a day's time. They would have exported the very next day to claim this duty drawback. Now, those cases, they say, look, it should be meant for personal and private use. Only then the rebate of 98%, the drawback, is permissible if it is re-exported immediately. That means I wouldn't take it for my usage. Moving further. So what if I don't meet the condition? What you have said? If the car or specified goods are re-exported after being used. Now, please remember, even this slide, when I talk to you, this talks about personal and private use. This slide talks about personal and private use. This does not talk about your commercial use, because if it is meant for commercial use, many people know how to make money by way of import for a temporary use and then re-export. An insurance company, they pay money, they are the money maker in between. Now, to curb all these unethical practices, they say, if the car is imported and re-exported after used. So what they say, if it is exported within a first year, then I apply depreciation of 4% per quarter or a part thereof. So I have used this car for 7 months. So I have 2 quarters, 6 months, 7 months happens to be the third quarter. So part thereof, even the third month, I do calculate of 4%. So they wanted to depreciate your duty by this much. Since I've used it for 3 quarters, 4 into 3, 12%. So from 98, straight away I'll reduce the 12%, and the balance 86% I will get as a duty drawback. So if it is in the second year, additional 3% per quarter. If it is in the third year, 4%, 48. In the first year, 4 quarters, 16% is gone. Second year, 3 fours are 12, 12% is gone. Similarly, in the fourth year, 10% is gone. In the fourth year, 8% is gone. So this is how you have a rate cut in terms of the number of years. So what if it is beyond fourth year? You'll not get any duty drawback. Now, though the provision, this particular says 4 years is the time limit, generally, the customs officer is not blindfolded to give you a permission. So any car which has come after a period of 2 years, there should be a reason to be shown to the satisfaction of the customs officer to allow for beyond 2 years. Reason under section 74, the general time limit is 2 years. So when a car has come beyond a period of 2 years, sufficient cause should be shown to the proper officer to give a drawback for that car to permit as a re-export beyond 2 years. So if I don't give a sufficient cause, no export will be given, no drawback will be given. So beyond 4 years, no drawback. Now, this slide talks about my time limit for other aspects. So when I have to file my refund, my rebate for drawback, there is a prescribed form. Now, these days, everything is electronic. Earlier, there was a manual form. Once I export the goods, I have to fill a form. I have to file that particular form with the customs authorities. Now, these days, once I have an e-declaration, the application for customs, that is filing a shipping bill or bill of export, that itself is a document which is called as a prescribed form. Now, they say within 3 months, which can be extended for further 3 months, from the date on which an order permitting the clearance of goods for export is given, I have to file this application for duty drawback. Now, for me to file an application within 2 years, and once I get an order, LEO, when I refer to this order, please understand, students, it is LEO, Let Export Order. From the day the customs officer passed an order, within a span of 3 months, I have to file my application. Now, I have reiterated here, I have to re-export within 2 years. Once I have exported, within 3 months from there, I have to file my application. So first condition, come for export. How? Within 2 years. Once the officer has given this order, you file your application within 3 months. Examination. Please expect one question for 2 marks in relation to this slide, where they'll give you a transaction to calculate the time limit of 2 years. Once you have calculated the time limit of 2 years, they'll come to this usage where this 18 months chart is there. Once you have examined this 18 months chart, then they'll come further to examine this 3 months. So examination, what they will test you? First test is your re-export of 2 years. Second test, assuming that it is for reuse, that 18 months chart. You have this page number 6.8. This 18 months chart would be tested for you to calculate how much is the rebate eligible. Third condition, whether within 3 months of the order passed by the proper officer, did the application filed with the concerned officer. Now, these days, this form, as I said, it is electronic. So most of the cases, I need not worry with my refund application. Now, so what if I don't file within 3 months? There is a late fee with which they permit you to file your application further. Come to page number 6.12. Examination, they'll not test just for your academic interest. So I have to file within 3 months. So what if due to COVID, I missed, like I was hospitalized, I was not keeping well. Then there is a 3 months further given. So even that 3 months gone, I couldn't do anything. Come to ACDC, show the reasonable cause, they'll give you further 3 months. So this opportunity is also lost. Then final level, go to commissioner or principal commissioner, 3 plus 3, 6 plus 3, beyond 9 months, further 6 months condonation can be given by commissioner. These are the aspects connected with my section 74. Before I come to section 75, let me see if there are any questions so far. Namita is asking, Namita says 95% drawback as Mr. P done test run of products, so usage come under less than 3 months period. Ms. P, no, in case of apparels, Namita, in case of apparels, used apparels, you won't get any drawback. Look at your page number 6.7, Namita. List of goods which are not entitled for drawback. So wearing apparel, if it is used, I cannot claim any drawback. This 95% is not correct, Namita. Sairam says, sir, what if I'm not accepting the car? I'm returning the bag without accepting the car. Huh. You need not file no, at the time of clearance, Sairam. You don't cause the clearance. You request the officer to export as it is. Then you are entitled for 98%. Namita is asking this question. Sir, I have used this car. That is very next day, the event manager sends the car. Then duty drawback will be reduced by 4% as per as a part of covered quarter is covered. Now, this case, Namita, if it is used other than personal or private use, then you will not entitle for drawback. I was saying that commercial usage. If I use it for commercial activity, then it will not be entitled for duty drawback. And remember, when it is coming back, always the offices have a prior information where all this car went, what all purpose this was used, and then they will decide whether to give duty drawback or not. Reason, a sufficient suitable cause should be shown why this drawback is entitled for. Namita is asking this question, sir, in section 74. Time limit is 2 years, but if goods are exported after 18 months. Now, 18 months is within 24 months. Then no drawback is allowed. Is this? It is contrary to each other. Namita, understand this, women. 2 years is in ordinary aspect. Sir, I have received the laptop. I have not used. I have left as it is. 20th month, go back to the customs and say, sir, I received a laptop. After 20 months, I am coming to you. Was it used? I'll say, no, it is not used. Claim a rebate of 98%. If the laptop was used, then you will come to this rate chart under 6.8, Namita. A thin line of difference. Examination, this is the question they are going to test you. A laptop which has come, not used, came for re-export at 20th month. Don't jump into conclusion that because it is more than 18 months, nil rebate. This rate chart, what you are seeing here, students, it is used only when the laptop has been used. Right? This is after usage. Hope I have clarified your point, Namita. Coming back, section 75. Now, the ideology with which this section 75 has been drafted, they say that, look, the goods which are being exported are entirely different. The goods which I'm exporting are entirely different from the inputs. Like example, sir, I have imported plastic dana, plastic granules. These plastic granules which I have imported, what I do, I heat, I put color, then I put a small molding process, I make a plastic product out of it. Say, take an example. Say, this is my finished product. Now, this finished product is different from the input. So, what is an input? Input is a porcelain. It is just a particle. All tiny particles. What I have done, I have put together, I have put into a process of manufacture. I made a finished product which has a different attire altogether. So here the government says the goods which are exported are completely different from the inputs. The input could be either imported goods on which duty of customs has been paid or indigenous goods. So whatever inputs we are using, it could be imported goods or it could be indigenous goods on which central excise duty has been paid. So the government says, look, you have used some compounds where there was a levy of customs duty. There was a levy of excise duty. Right? Now, example. So in the process of heat treatment, I use something called petroleum products. Tincture. I apply color to remove excess color. I use something called there is something called there's a liquid which is made out of petrol. So when I have used petroleum products, there was a levy of excise duty. Excise duty, I cannot take input tax credit. Customs duty, I cannot take input tax credit. Point number 3. The existence of imported this duty paid goods or the existence of this excise paid goods in the final product is not capable of easy verification at the point of export. So the government says, look, you have imported some compounds, you have used some particular compounds which are domestically procured. Now, these two particular compounds which have been used, I cannot verify where at the point of export. So what they say? The goods, namely inputs, might have undergone changes in physical shape, property, etc. The quantity of inputs per piece of final product may not be uniform and may not also be capable of verification. I cannot quantify, I cannot measure, I cannot easily compare how many components are there in final products. That point in time, the government has formulated this mechanism called drawback under Section 75. Drawback for what? Drawback for this element of duty, drawback of this element of excise duty which was paid. Why? These components are exported. In that case, my customs law has brought in this mechanism called drawback under Section 75. Namita, your point comes here, ma. I couldn't read your question completely. That question, I would request you please post back so that we can discuss on that in 10 minutes down the line. Now, imported goods used in manufacture of exported goods. Section 75 says that considering the above mode of usage, considering the goods which are imported and which are consumed for re-export, a drawback shall be allowed for what? The duties of customs chargeable under this act or on imported material or the element of excise. In addition to my customs duty, the element of central excise which has been suffered, which are used in the manufacture of or process of such goods or such operation to manufacture such goods. Then the central government, by way of a notification, direct a drawback shall be at a rate to be fixed or to be notified. So considering all these aspects, my element of customs duty, my element of central excise as a fixed percent, as a fixed element, as a fixed rate, government may say, Praveen, when you are exporting, say, plastic cups, you are entitled for 5% as a drawback. Praveen, when you are exporting pens, every pen you are entitled for a drawback of 2 rupees. Now, my drawback could be a fixed rate. My drawback could be a fixed percentage. I could have anything which is possible. Now, having said that, terms and conditions. Sir, is it a free permissible trade? They say, my drawback is not allowed in few cases. What is that? Condition and situation prevailing under 74, 75 are different. Okay. My Section 74 as it is, Section 75 which is in a composition form. Now, if the identity of the goods is not possible, okay, I think I have clubbed this heading wrongly. I just made a comparison, students. My mechanism under 74 is as is clearance. My mechanism under 75, there is a process which happens. There is a manufacturing activity. So identity can be established. Identity cannot be established. This particular slide, I have brought examination. There is a 3 marks theory question. Differentiate the duty drawback permissible under Section 74 vis-a-vis the duty drawback permissible under Section 75. So the first point is my Section 74, the identity can be established. Section 75, identity cannot be established. Section 74, 98% of that duty I can get as a rebate. Under Section 75, it is a fixed percentage or fixed rate. Depending on the goods, the government is going to notify. Identity of the goods not possible under 75, but it is possible under 74. Now, 75 says that, look, you're using inputs for using in manufacture. Once the value has been calculated, it is important to compare inputs, how much percentage you have used, inputs, how much percentage you have used, in the value of goods exported, how much of value is consisting in that. I'll give an example. So I have, when I look into my cost sheet, there is a prime cost. In my prime cost, your direct expenses, that is your raw material, your goods. In my cost sheet, when I look at the prime cost, my value of imported raw materials is 5%. This 5%, if I go for duty drawback, on 100% value, I'm getting a rebate. Now, this is something which is not proper. So the government is going to formulate rules how to compare the inputs which is available in my output. This is a policy decision which happens at a macro level. When I go to the respective slides, I'll explain you how the government is going to think all these practical permutations and combinations. Now, this is a fantastic analysis. I'll explain you this. Yes. The government says, look, I'm not going to pay you drawback just like that because you are manufacturer. To give you a drawback, you have to satisfy a few conditions. Now, first case where my drawback is not allowed. The export value of the finished goods or the class of goods is less than the value of imported material used in the manufacture or processing of such goods or carrying out any operation. So I have imported value of goods, say 10,000. This 10,000 I have used in the manufacture of goods and I have exported the finished goods. The value of finished goods is 6,000. The government says, look, your import value and your export value, when I compare, my value of export finished goods or this particular class of goods is much, much less than the value of import material which you have, on which you have paid your duty. So in case of disparity, my purchase is higher than my exports. So in this case, I will not be entitled for drawback on under section 75. So where do we have this particular exposure? Imagine this case, students, where I have imported plastic compound. I have imported plastic compound worth 10,000 per kg. I use this plastic compound in a process. In the process of manufacture, at a semi-finished product stage, I realized that some composition issue was there where this plastic is a defective component. Now I want to hide this particular aspect. What I did, I manufactured, finished product has come, and this finished product cannot be sold in India. So I have exported to a particular country where it can be used as a substitute for the primary product. Primary product is sold, say, for 12,000 USD. This substitute is sold for, say, 2,000 USD. Very, very subsidized price. So this value in INR, I've imported for 10,000. The finished product could fetch only 2,500. So when I've exported the value for 2,500, the proper officer is going to say, Praveen, look, you have paid customs duty on 10,000. Now we have come with the export value of 2,500. Why should I give you a drawback? Because the value is much, much lesser. They reject your application. Next, the export value, scenario number 2. The export value is not more than such percentage of value of imported material used in the manufacturing process or carrying out operation. Now, they have a technical parameter. Now, technical means when we have this make in India concept, similarly make in Singapore, made in China kind of thing, they give a composition. Like example, you see this Drawback honey. When I look at Drawback honey, there is a composition of various components. Assuming for a moment, Drawback honey has imported one of the food ingredient called this, what you call this red leaf, which is found in Kashmir, which is used as a healthy ingredient. Assuming for a moment, there is a small chemical food compound which was imported, which was added to the honey and then exported. Now, for this kind of composition, there's a percentage. The government has said, look, your export should have 5% of this particular compound which was used in this particular process. Now, government prescribed 5%, but my rate chart shows only 2%. I've used that particular imported compound only 2%. If I use 5%, my FSSAI, who give a food license, may not permit. Or this compound, this particular product may be classified with a different HSN. For various practical reasons, they have formulated what is the percentage of imports used, and in the export product, how much percentage bare minimum that compound should be existent. Third, the drawback shall not be allowed where the sale proceeds in respect of which were not released in foreign currency as per the regulations of FEMA. I have not received money in foreign currency. Now, most of you would have seen this case. RBI regulation. Wherever money was coming in foreign currency, every shipping bill means when the goods are exported, against the shipping bill, I have to give an intimation to the banker saying that for this particular shipping bill, this money has received. So what happens? My transactions where the value of money which has received, it has to be matched with the shipping bill. RBI as on today is a regulator where they say whatever goods you have exported. Now, when I have exported the goods, IEC is mandatory, import-export code. Based on my IEC, this particular RBI portal has got an indication. They say bill of entry, shipping bill wise, they say these are the total value of goods exported. Now, for each of that particular shipping bill, I have to receive money in foreign currency. When I receive money in foreign currency, I'll go to the banker and say, sir, I have received so much of Australian dollar, so much of euros, so much of USD for this particular shipping bill. I'll give an extra copy of shipping bill to the banker. Along with that, I'll say, this is the day I have received the money. So what does the banker will do? He will log in his portal and he'll say, for this IEC, against this shipping bill, this money was received. Once this mapping is done, it goes out of reconciliation. So all these unreconciled shipping bills, generally RBI sends an email saying that, look, for these shipping bills, there was no money repatriated in convertible foreign currency. So the government says that whenever you're not released money in this particular foreign currency, you're not entitled for rebate under Section 75. So what if money has to come as per FEMA regulations within a 1 year? Now, this is a post-rebate condition. Means at the time of rebate, they say, I give a rebate with the condition that you're going to repatriate foreign currency. If you're going to fail to repatriate the foreign currency, I presume that you're not entitled for this rebate in the first stand, and then this money, whatever was paid to you, will be recovered with interest. Next. The government, central government has a mechanism to formulate rules who can be entitled for duty drawback. So they say part of that, duty drawback is allowed on the amount of duty which was actually paid in the goods imported material used for manufacturer process. They say, look, I'm going to specify the goods in respect of which no drawback shall be allowed. Now again, it's a policy matter. I'm going to decide in respect of few goods where I'm not going to give drawback. They're going to specify a procedure for recovery of adjustment of drawback in case where there is a variation in the basic material or which drawback rate or interest is fixed. Sir, I have the government has given a particular rate. How did they give? Say you're a manufacturer of compound A. You're going to declare that, so I'm going to use 20% of chemical X, 30% of chemical Y, 40% of chemical Z, X, Y, Z. I have various composition. Based on your composition, I have given this duty drawback. Assuming that this 20, 30, 40 was changed at a later point in time. X instead of 20 was used 40, Y instead of 30 was used 20, Z instead of 40 was used 20. The government looking at your process, they give a rate chart. After some point in time, if you've changed that rate chart, they say, I'm not going to give this particular duty drawback. Students, we are at 8 p.m. Let's have a break for 5 minutes. 8:05, let us resume back with our discussion. Let us have our continuation. So we have understood that the drawback is not an easy route. For enjoying drawback, I should have ensured that my import and my composition of import in an export product has to meet a specified criteria. Has to be, my export value should be higher than the value of imports used in that particular compound. Similarly, they say that if I have to repatriate the money, but I have failed to repatriate, then again, my customs authorities have a right to recover back that particular money. Now, moving further, they say there is a certain certificates or documents or some other evidence which is necessary for determining what is a drawback possible. Now, based on your industry practice, they'll say, look, you have given that this is your cost sheet. You have given that these are the primary ingredients required for your process. Say day one, year one, you have been depending on 80% of imports. Year two, 80% has become 60. Year three, that 60 has become 40. The drawback, what I have given, assuming the composition is completely changed year on year. So they say, I'll give you based on few evidences to ensure that your drawback is in line with that particular certificate. Now, when I say certificate, it is a guidance which is given by commissioner or principal commissioner to your nature of business. Now, they also say that in the process of your business, look, I have to understand your business process. So I need access for what? Your manufacturing premises. I'll give an example. When someone walks into a Japanese company, manufacturing company, it is not easy that any outsider can just walk into the shop floor and look at what is happening in the production bay. They don't permit. They say, sir, it is confidential. Only the designated and authorized people are permitted to walk into my production process. Now, their government has formulated a law. Look, you have to give a permission to see what is the operation you are doing, what is the operation process happening. Let me look at the whole operations which is being carried out by you, and let me make necessary examination or a study of so-and-so process, and to ensure that the data what you have given is right or wrong. For me to fix the duty drawback, like assuming some motor vehicle manufacturer comes to the customs officer. Sir, I import 80% of my raw materials, 20% is domestically imported. Now, for me to understand, for me to design, for me to fix a rate, let me come to your factory. Let me examine your process. Let me see what components you buy, what all components imported, what all components you have. You give your cost sheet. Now, this is how they examine and they allow you to get a duty drawback. And the manner and the time within which the claim for payment of drawback may be filed. So for filing an application, again, this is an online application. What is the time limit, etc. Government may formulate rules. So government is going to design all these aspects. So what is there in store for us? Now, when we read all these things, I would put it to you this way. It is not just for clearing my examination. These are all practical aspects for me. Once I get qualified and once I get into the industry, I take the position of CEO or CFO. I have to understand what is the relevance of my cost audit report. What is the relevance of my costing in terms of determination of what is my dependency on imports, what is my dependency on indigenous products. In the cost of my imports, what is the exposure I have in relation to my duty paid? How much is the element of duty is hitting to P&L? How much is the element of duty going to balance sheet as my current asset? The amount of duty which is hitting to P&L, there is something called duty drawback under Section 75. How do I ensure that some portion of that drawback, that duty which is paid on imports, which is hitting to P&L, is there a mechanism where I can make good of that particular duty drawback? I think Sairam asked this question. Sairam, this duty drawback, what I'm getting from government under Section 75, is that portion I'm going to account in my books of accounts as miscellaneous income under P&L account. Why I'm doing that? Whatever cost I have incurred, government is going to compensate me as a fixed percentage or fixed rate. That portion which is coming to me as a drawback, as a rebate, I'm going to hit to my P&L as miscellaneous income. Now, as of today, the government, the customs law has prescribed 3 kinds of duty. 1, 2, 3. First is all India rate. Now, this is a general rate. I call GR. Just give me a minute. I call this is general rate. Means it is applicable to common. It is applicable in general for many of the business people. All India rate. This is prescribed under Rule 3 of my Customs Central Excise Duty Drawback Rules. Look at the term. Customs duty paid on imports. Central Excise, which is the duty paid on my goods manufactured in India, were subjected to central excise. As of today, my petroleum products and alcohol are subjected to excise, state excise and central excise. So for that reason, they call this is customs central excise duty drawback rules. Second, brand rate under Rule 6, where the rate of duty drawback is not fixed. So when the rate of duty drawback is not fixed, I make an application under Rule 6, which is called as a brand rate. So for your, as the name goes, look, this is applicable for your brand. This is applicable precisely for you. Third, special brand rate. Like dosa, which is ordinary dosa, masala dosa, special masala dosa. So I have rate fixed. Now having rate fixed, I say, sir, I come under Rule 7 say, sir, I'm not happy with whatever brand rate you have given to me. I have to get more than what you are giving to me as a drawback. Why? I have my statistics, I have my figures very clear to me, stating that, look, this is my composition of inputs. This is my finished product. On finished product, you gave, say, 5%. But when I look at my composition, let me just give you an Excel file so that you can understand this calculation very easily. I'll come to my Excel file, students. Mechanism to calculate or to compute drawback under Section 75. Now, I'll just give an example how this gets worked out. So let's look at input value percentage customs duty. Raw material 1, raw material 2, then consumable labor. So value just per component when we do manufacturing. So this is 12,000. Raw material 2, say 45,000. Then my consumable, some 1,250. Labor, say some 6,000. I call this is total overheads, some 450, and I'll put total. I can call this is cost of goods sold. Let me add profit, say 15%. On this 15%, then my FOB value for export. COGS plus profit. Now, assuming that the drawback under Section 75 for this particular industry, for this particular nature of industry, drawback is allowed 2% on FOB value. So what happens here? on this particular 74,000, I get 2% as customs duty. This is a customs duty which is fixed by the government, central government under section 75. So whatever goods you have exported, 2% I am going to give as an incentive. What? For what purpose? For the customs duty and excise duty which has been suffered on your inputs. Now, say customs duty is applicable. I'll say yes. Consumables no. Labor no. Overheads no. And assuming that I have paid 18%, I have paid say 12%. Now, how much is the customs duty I have paid? On 12,000, assuming this is after customs duty, into 12 divided by 112. Similarly, 45,000 in, sorry, this should be 18%. What I'm doing here, my 12,000 is including 18%. So I'm just calculating that 18% customs duty. Forget all your social welfare surcharge and other components. So in case of 45,000, I'll say 45,000 into 12 divided by 112. Now, what is happening here? I have my books of accounts to reveal. I have my books of accounts to reveal that, sir, I have paid this much of customs duty. But what is happening here? You're just giving 2% as customs duty. Now, I can prove to the authority concerned saying that, look, this is my process. For this process, this is the cost. For this cost, this is the dependency. I go one to one with my facts, with my books of accounts. So beyond your auditing, beyond your accounting, beyond your tax advisory. Now, this is a role where most of you, once you get qualified, you get into the organization as a CFO, where you focus most of your time in terms of value addition. You'll do this analysis. You'll go to the customs authorities and say, this is something which is not acceptable as. So what is acceptable to you? You will say that, sir, I have been suffering on my value at 9%. So what you have given is 2%. So why don't you give me 9%? Government says, no, your industry rate, like you're into say, cement manufacturing, looking at your industry, instead of 9%, let me give you 5%. Now, this is how my brand rate, all India rate, brand rate, special brand rate is fixed. AIR, brand rate, special brand rate. What is all India rate? It is in general. So for all the manufacturers you have been operating, they'll give you this is a standard rate. I need not ask. Example, sir, I do 10% of imports, rest all 90% indigenously done. Okay. So I have this particular standard rate. I need not question. Brand rate, so for my industry, there's no duty drawback fixed. So fixing of that is done under Rule 6. So, special brand rate, like ordinary dosa, masala dosa, and special masala dosa. So you have given only 2%. Chutney is not there, sambar is not there, or the potato stuff is not there. So I go with the records to the officer to convince something called special brand rate under Rule 7. Let me come back to my presentation. Now, this is one definition. Examination expect a 2 marks theory question or maybe 1 mark MCQ question, where depending on the term export, examining the applicability of duty drawback under section 75 or section 74. Under section 74 or 75, MCQ could be tested from this particular definition. Export with its grammatical variation in cognate expression means taking out of India. Means taking out of India to a place outside India, or taking out from a place called DTA to a special economic zone, and includes loading of provisions or stores. Now, when I say loading of provisions, you remember yesterday, the day before yesterday, we spoke something on stores. Indigenously, I am a manufacturer. I'm giving some of the spare parts as stores to the foreign going vessel. Where Vidula asked this question. Sir, in case of stores, what if I sell? What if these are consumed? What if these are tranship? Vidula has asked 3 questions in relation to the stores. So please understand that any components which are sold to a foreign going vessel as stores, even that can be called as exports. So there are 3 things we have to understand. One is taking out of India. Second, from DTA to your SEZ location. Third, indigenous manufacturer selling goods to a foreign going vessel as stores. All these 3 are defined as exports. Examination, MCQ, out of these 3, they will test you 1 question. Mrs. ABC Private Limited sold goods to Mrs. XYZ PQR Limited, who is a SEZ unit. ABC Private Limited has claimed this transaction as an export. True or false? As a definition given in my exports, any goods sold from DTA to SEZ is considered as my export. Second example, Mrs. ABC Private Limited has sold the goods manufactured in India to a vessel for a repair activity in relation to the repair activity done in territorial waters. And this particular vessel happens to be a vessel which has come to India for the purpose of unloading, and it is a foreign going vessel. ABC Private Limited claims that this is an export transaction, though the sale happens in a territorial waters. Examine, true or false. Any goods sold as stores to foreign going vessel is again considered as exports. Examination 1 MCQ on the definition of exports. Continuation to this 2 marks question. Export is defined as taking out of India to a place outside India, out of India. Hence, export is complete. Look at this language. Export is complete when goods leave territorial waters of India. So, when the goods are leaving my territorial waters, it is deemed that export took place. So, why are you saying that? Look at your institute material, page number 6.20. There are a couple of citations of Supreme Court were given where they say it does not matter whether goods reach the destination or even not. Duty drawback will be available once export is complete. So what they say, once the goods leave territorial waters of India, it is deemed that export took place. So what if a vessel which is leaving India, it crossed territorial waters of India. Once it crosses, there is a sinking of the vessel. The goods never reached the foreign soil. It never reached the customer. How can you call this as a export? This definition of export is good enough to say a aircraft or a vessel, when it leaves my India, that is to say cross territorial waters, it is irrelevant whether the goods have gone to the customer or not. Based on that, they have given a couple of judgments saying that export took place. Once export has been took place, my duty drawback under section 74 or section 75 can be completely entitled for. So this is the importance of this definition called exports. Now, as I said, conditions. Sir, I don't give a drawback even under section 75. Under section 74, I've given few cases. Even under section 75, I'm not going to give a drawback. So what is that? If the said goods except tea chest, which is used as a packing material for export, have been taken into use after manufacture. So what they say, sir, I have manufactured the goods. After I have manufactured, I have put to use, then exported. I have used as a packing material. So I have manufactured the goods, I have put to use, and then I have exported. Then you're not entitled for drawback. The goods which are manufactured, except the tea chest. Why? Tea chest is a box where I have to store my tea powder or the coffee powder. Now, the purpose of tea chest is storing. So the tea chest which is manufactured, if it's filled with the tea, it is not barred from duty drawback. Further, If the said goods are produced and manufactured using imported materials or accessible material in respect of which duty have not been paid. Example, SAZ. Example, EOU. Example, foreign trade location, FTZ, STPA. So I have imported the goods. When you never paid the tax duty on the goods, when you're exporting, from where you can get a drawback. Examination, again, one mark MCQ. STPA who have imported a laptop availing a benefit of a notification 52 of 2003 or any specific notification where the customs duty was not paid. This particular STPA have exported some goods to, say, Singapore. They have claimed a duty drawback as per all India rate. Examine the duty drawback provisions. Now they say when the goods which are imported have not subjected to customs duty, where is the question of drawback? It is against the principles. And these 2 points, it is a policy matter. I don't have a reason why it has been defined. They say that on jute batching oil used in the manufacture of export goods, that is jute yarn or twist. Similarly, if the same goods being a packing material which is used in relation to export of jute or fabric. Now, these cases, they say that I cannot give a duty drawback. Now, so what, like, one point in time, I have explained the backdrop, how the customs department work, how the anti-evasion intelligence department works. Now, there is a committee called Duty Drawback Committee. Again, the learned academicians and the research scholars do work in this organization because it is very, very practically impossible to fix something called duty drawback. For fixing this duty drawback, they have come with this particular mechanism. Rule 3 has given how they work to fix a duty drawback. What they say? First, they say, what is the average quantity or value of each class of description of a particular class of goods which is ordinarily produced or manufactured in India. So they say, first I'll identify. What do I identify? I identify those goods which are produced or manufactured in India. I identify their description, I identify their material, I identify their class. Starting point is, let me see who are manufacturing. Based on that, I'll identify the average quantity or the value of imported material or accessible material, which is used for production or manufacturing in India of a particular class of goods. So what they are doing, sir, I have understood who are the manufacturers. Now, for those manufacturers, I'll go one step further. I'll see what are the goods they have imported. I'll see what are the goods on which they have paid excess. Let me understand. Then I'll understand the average amount of duty paid on those imported goods, the amount of excess material used in the manufacture of semis or components or intermediate products which are used in the manufacture. Now, here I've identified the value they are paid. Here I've identified how much they are going to consume. See the way they are doing. I've understood a manufacturer. Having understood, I've understood how much they are paid. Having understood how much they are paid, I'm understanding how much they are going to consume in that particular product to manufacture. Now further, look at the way they are going to understand. In this particular goods which you're going to manufacture, I'm going to examine how much is the wastage. Out of that wastage, how much is the amount recovered? The amount recovered, I'm going to deduct from the value what you spend at step number 2. Then what they say? What is the average amount of duty paid on this imported material, excess material used for containing or packing of the export goods? So I'm going one step further. What is your packing components? What is the amount of components which is kept in the export goods as it is? On the basis of any other information, government is going to determine how this all India rate is going to fix. My AIR fixing of this all India rate is done on these 6 stages. Now look at the way I have rubber industry, I have cement industry, I have automobile industry, I have chemical industry, I have paper industry, I have jute industry, I have steel and infrastructure. Based on various industries, they get the statistics. There's something called, what is that? Legal Meteorology Act. Every year, there is an annual return to be filed with Legal Meteorology Act. Now, there are various sources where this Duty Drawback Commission, the authority, they take the information. They have to look at the value of imports. They have to look industry-wise, how the imports are coming, from to where it is coming, from there, how the consumption is happening. Is it used for manufacture? Is it used for trading? Out of that import, how much is sold domestically? How much is to SEZ? From SEZ, how much is going back? This is how they work on various factors, and they fix under Rule 3 something called All India Rate. So moving further, I am into a kind of industry where my amount of rate of drawback has not been determined. Some reason duty drawback has not been determined. So as an exporter, within 3 months from the date of the relevant event of export, I have to make an application. When I know that for me, this duty drawback is applicable depending on the nature of production manufacture I do, I make an application to the principal commissioner or the jurisdictional officer who is concerned with my export. For what? For determining the amount of drawback where I can get on the basis of the information or explanation I'm going to give. Rule 6 is talking the case where I have not entitled for drawback, or for my industry, the drawback rate has been not fixed. Now, moving further. Rule 7, special masala dosa, where they say cases where amount of rate of drawback determined is low. Like I gave one example where we have understood what is the composition of my raw material, what is the finished goods. On finished goods, the government has fixed 2%. I, through my records, proved that at least 9% is required. In via media, 5% was given by the government. Now, assuming that you happen to be a CFO, 2% is what government is paying. You argued and you have convinced and said 9% is required, but government gave 5%. So from 2%, 3% is what you're going to fetch. Assuming that on an average every year you get 20 million as drawback. By increasing it by 3%, you're going to get another 45 million. It's a feather on your cap. What salary you're drawing to the company and what you've fetched to the organization is enormous. And wherever you go, you can say as a value add, saying that, look, I have worked on duty drawback to get a rate fixed from 2% to 5%. And I would say it is a big achievement. And most of the big organizations, where they have predominantly export transactions, they work on this drawback. And just to tell you, students, highly paid professionals are found in this area. And I would say in India, there are hand-picked professionals who work in this particular industry. Reason, a lot of research work is required. When we talk about paint industry, when we talk about chemical industry, to prove this rate, which I have put in Excel, they have to understand what is the total volume of imports happening in India. What is the value of exports happening from India? Assuming that they're in the paint industry, they have to do a thorough analysis. Who are the competitors? Who are the importers? Who does the local manufacture? Who does the import? What is the costing? What is the cost sheet they have? What is the profits they have reported? What are the various reports which are publicly available? You have to analyze their tax audit reports, transfer pricing. They have to analyze their cost audit reports. So what if they don't have transfer pricing? You have a cost audit. So what if they don't have cost audit report? You have to take various information to put a comparative analysis and then come with a convincing factor to the government authority. Now, Rule 7 says that, look, in respect of any goods where the exporter finds that the amount of rate of drawback, which he is determined under Rule 3, as the case may be, or revised under Rule 4 for the class of goods, where it is less than 80% of the duty which is paid on the material or components. So in this case, what happened? In the example, what we were talking through, 2% is government giving, 9% is what I'm proving. Let me just come back to my Excel file. Now, if I look at this duty drawback, I'm getting 1,488 When I compare on this 6652, now this is a percentage. The government says my 6652, if it is beyond, if it is more than 80%, now to prove that it is more than 80%, now 81%, this, no, at least, now, if I have this kind of scenario, I'm just making a comparative explanation, students. Assuming you have 7,982 as a proven record and government is giving 1,488. So you will say, sir, you are giving 19% of what I have to entitle for. Then your rule 7 comes into picture. What it says, if you are proving to the officer concerned that the goods which you're proving that the drawback which is given to me is less than 80% of the duty what I have paid, then I can make an application under rule 7. Please, they say that if you are going for rule 7, except where a claim for a drawback under rule 3 has been made. So for claiming a drawback under rule 7, if you want to eat special masala dosa, they are saying that don't eat masala dosa. Sorry, don't eat the dosa. Dosa gets converted as masala dosa under rule 4, where there was no rule 6 brand rate. So for me, there was no drawback. Then you apply under rule 6. Rule 7, sir, you are giving something called ordinary dosa, but I'm entitled for special masala dosa. How? My duty is 80% more than what you are giving. Then I can make an application under rule 7. There are few due dates. I'll just skip the due dates as a formality thing. Now, rule 8 says that cases where no amount of rate for duty drawback is to be determined, I should not pay any drawback under these cases. What is that? My amount of drawback shall not be determined, shall be determined in respect of any goods under rule 6 or rule 7, where the export value of each such class of goods is less than the value of imported material. So application filed under rule 6, not entertained. Application under rule 7, not entertained, where my export value is less than the value of imported material used. Further, if there is a percentage fixed as a norm, if my export value is not more than a percentage of value of the imported material. So it's a statistical equation. If you have used 33% of raw material, working back with the scientific equation, my export value should be of 85%. So import value is 10,000. 1.85 times of 10,000 should be my export value. Now, this is a statistical means which was fixed by the government. So if any of these occasions occur, rule 8 says that, look, don't give any drawback. Now, this is a higher ceiling limit. Examination, 1 mark for MCQ or 2 marks as a problem. What they say, maximum duty drawback. When you're giving a duty drawback, what is the maximum I can pay? The amount of duty determined under rule 3 shall not exceed 1/3 of the market price of the product. Look, when you're paying your drawback, please ensure that this is a capping. What is that? Look at the market value. Whatever is the market value, on that market value, if you apply 1/3, the resultant figure, what you're going to give, that is the capping. This is a cap. You cannot pay more than this particular duty drawback. Just to give you an example, let's quickly come to one problem which is there in your institute material. Come to page number 6.35. Everyone come to page number 6.35. In page number 6.35, look at question number 2. Abdul Overseas Private Limited was erroneously refunded a sum of rupees 30,000 in excess of, sorry, I'm looking at wrong question. Yeah, look at question number 1. Look at question number 1B. Question number 1B. Raghuveer exports manufactured goods having FOB value of 86,000. Rate of duty, drawback on FOB value of exports 40%. Market value of goods. Let me come to my Excel. Page 6.35. Illustration 1B. So they have given few items. FOB value 86,000. Then rate of drawback 40%. So it comes to be 34,400. Market value. Market value is 96,000. So ceiling, that is the cap which is given under my rule 9. If you look at rule 9, there is a capping that 1/3 of the market price. So ceiling under rule 9. What is the ceiling? 96,000 into 96,000 divided by 3. I get 32,000. So here, drawback under section 75 shall be restricted to rupees 32,000. Now, in this case, though my drawback is coming as 34,000, my rule 9 says that don't pay this 32,000, pay only this 32,000. This is the application of rule 9. Next. Regular provision, examination, not much you can expect. Drawback. So there is a time limit within which my drawback has to be paid. So as per the law, when I file an application, within 1 month, I have to get my drawback. If the government fails to pay this particular drawback, I'll get a interest which is at the rate of 6%. So as of today, when application is filed for duty drawback and government delays in processing my application, they say that I'll be entitled for a interest at the rate of 6% on my drawback amount. Similarly, when a drawback has been paid erroneously to the applicant, I'm not entitled for drawback. Like example, your FEMA complaints, money should be repatriated in foreign currency. I'm not repatriated. Or you have got a percentage of drawback on the basis of your composition of raw material. Over a period of time, you have changed that particular composition. All these factors entitle not to get the drawback. So in those cases, from the date of order, that is the date of receive money till the date of paying back, you have to pay interest. When you have to get the money, you will get an interest at the rate of 6%. When you have to pay back to the government, you will pay back at the rate of 15%. Now, these are the technical aspects. I'll just go little hurry on from those points. Now, examination again. Prohibition of drawback, examination, 1 mark MCQ. Students, all this 1 mark MCQ, whatever I'm saying, now this is a strategy how you have to prepare for your examination. Getting a pass mark is just an entry to the corporate world. But once you get into the corporate world, how you are going to use this technical expertise to make a promising career is all within your hands. Let me put it this way. The areas where the professionals do travel very less, pick those areas. Very promising career is there. But everything comes with a hard work. No gain, no pain. Customs provisions, what we are reading here, institute material is very, very basic level aspects. But once you get into the profession, you have a lot of exposure. But the same way you get remunerated over a period of time, having a standing comfort in this particular line of service. Coming back, prohibition and regulation of drawback under Section 76. Section 76 says that there is a prohibition of giving a drawback. They say that no drawback shall be allowed where in respect of goods where the market price of which is less than the amount of drawback. Now, I could have a scenario, related party transaction. Now, this is all, I would say, sham transactions, bogus transaction, where I exported a consignment which is worth, say, 20,000. There is a scrap. Now, see, there are people who are very cunning and connivience with the knowledge of the law. This is called tax evasion. Assuming that there is a scrap which is worth 25,000. Scrap, no one will export. I have found a party abroad. I exported the scrap saying that this is worth 2 crore 50 lakhs. And assuming for a moment 2%, let me come to your Excel file to make you understand this. Drawback prohibition under Section 76. Market value of goods is actually 25,000. FOB value declared, say 2 crore 50 lakh. Now, so I have a drawback entitlement 2%. What happens here? When I file a shipping bill on the basis of this particular declared value, I get a refund from the government for 5 lakh. Now, I exported the goods. I have IEC. I have gone into dark. My business is closed. My office is closed. I have not been in traceable activity. Did I get money from foreign currency? Did I release that FIRC? Was there a foreign currency? That fellow who received scrap of 25,000, he never go to the customs port for clearance because he knows if he goes, there is a chain link where he gets traced out. So that fellow who never gets cleared this consignment from abroad. So for doing nothing, for 25,000 worth value, I got a drawback from government for 5 lakh. Now this is where the bill trading, the fictitious invoices in India, every fortnight we are seeing news. Look at the way I have a beautiful system, but there are people who jump over the system to make short-term benefits. Now, this way, Section 76 says that if the market value is less than the amount of drawback, I'll not permit the drawback under Section 76. Where the amount of drawback is in respect of goods which is less than 50 rupees. So if the value is less than 50, I'll not entertain your refund application. Now, also government feels that, assuming that the government has an opinion that these goods are in the nature which are likely to get smuggled back into India. So having the susceptibility of the nature of goods which are likely to come back into India as smuggled goods, let me restrict this industry not to get the benefit of duty drawback. So these are the provisions connected with your duty drawback. Here at 850, refund is a very small topic. Just 2 topics are there. Let me see if there are any questions so far on drawback. Saffron, yes, Naveen. Geeta also said saffron. Yes, we were talking about that example of Dabur. Assuming that I import saffron, now government says that 5% should be the minimum norm. If I put 5%, maybe my FSSA license may be terminated. For various reasons, I change the composition. So that could be the reason where this composition of imported saffron in the honey which is manufactured and exported will be compared. Namita is asking this question. So if duty drawback is allowed only after foreign payment is received. So why interest is levied on drawback if no foreign payment is received? See here, my duty drawback is not to be waited for foreign payment, Namita. I export the consignment. Within 1 month, I get back my duty drawback. Now, assuming that FEMA regulation says 1 year is the time limit for repatriation of funds. So what happened here? Within 1 year, the value of export money should have been repatriated to India in foreign currency. Now, in this case, my drawback was received in 1 month. Even after 12 months, money didn't come. So the section 75 says, when you have violated FEMA regulations, I presume that you're not entitled for drawback. The day you receive the drawback, till you pay along with interest. So this is how you read, Namita. Hope this is clear now. Next, Namita is asking one more question. Sir, if imported material reduced from 80% to 60% or 40%, so what is the loss to central government as levy of duty when material imported is also less? Namita, if you recollect the example Excel file which I have given to you, based on the cost sheet, I have a prime cost, I have various composition. Out of my raw material composition, I said few of the compounds I have imported. Now, based on your confirmation that you are using 60-40 rule, based on your 60-40 rule, I gave a percentage. After some point in time, this 60-40 reversed, you made 40-60. So when you made 40-60, your dependency on your duty also changed. So my drawback rate also should be changed, Namita. So that is the reason I was saying, when your drawback rate has been fixed and it is on a based of your process set. If you change your process, government has a right to claim back that money. Hope this is clear, Namita. Geeta says, sir, it is actually, it is all industry rate or all India rate. All India rate. No? If I have misspelled, I'm sorry for that. It is a all industry rate, not all India rate. All industry put together, it is fixed. I have misspelled, sorry for that. So in section 76, market value in India is seen. Yes, Namita. What is the doubt? It is a market value in India, Namita. Though it is worth 25,000, I declared 2 crore 50 lakhs. What I am referring to market value is the value which is available in India, Namita. Now, let's quickly come to customs law. Refund under section 27. Now, this refund under section 27 is very simple and straightforward case where leaving your drawback cases, where I get a entitlement of refund. How do I get a refund? I have paid tax which is not payable. I have paid duty which is not payable. I have paid excess. A person who has paid duty or interest excess, then I can get a refund. A person who has borne the incidence of such duty or interest. Now, these are the two cases where my refund under section 27 gets applied. I'll give two examples for you to understand. Say, a consignment from Kazakhstan has reached Mumbai, Tuticorin Customs Port. From Kazakhstan, a consignment, a vessel has reached Tuticorin Port. Based on this, a CHA has intimated the accountant. So the consignment has come, please make a duty for 2 lakh. At the same time, CHA said, so there is one more consignment which has come to this in Indira Gandhi International Airport, T2 or T1, where you make another challan for 8 lakhs. So there are two consignments come. One has come to Tuticorin Customs Port, another to Indira Gandhi International Airport. I'm supposed to pay 2 lakhs here in Tuticorin. I'm supposed to pay 8 lakhs for that bill of entry in ICAI Delhi. For a moment, I crisscrossed. I paid 8 lakhs to Tuticorin transaction. I paid 2 lakhs to that Delhi transaction. Now the CHA says, first he has cleared Delhi consignment. He said, sir, you have paid 2 lakhs, but we have to pay 8 lakhs. So what he did, he immediately deposited that 6 lakhs to get that consignment released. Now CHA cleared that 8 lakhs consignment. Now when he has gone for Tuticorin, he saw that Challan was made for 8 lakhs, but actually have to pay customs duty of 6 lakhs. Sorry, 2 lakhs. There was an excess payment of 6 lakhs. There, I can file a refund application for that 6 lakhs. Second scenario. A person who is other than importer who has borne the instance of duty or interest. There was a scenario where I have imported a particular electronic television. All flat TVs which are being imported, there was a levy of safeguard duty at the rate of 12%. Later, government realized that there was a wrong interpretation of a classification. It should not be on a television, rather it should be on a laptop. So what they have done, it should not be on this, rather it should be on that. So what happened here? Any safeguard duty I have paid as a buyer, not as an importer. Importer collected from me for a moment. Dell has got a SEZ location. Dell imports all those. Samsung imports those consignments. They file a bill of entry. They collect safeguard duty from Praveen. They collect safeguard duty from Priya. They collect anti-dumping duty from Namita. All these duties which are collected, if it is paid to government, and later government say, look, it was a wrong classification. Instead of 8412, it was done as 8422. Because of that, there was a levy of safeguard duty. I noticed as a consumer at the time when bill of entry was given to me after payment of duty. At that time, where there was a wrong payment, I as an individual customer, other than importer, I can claim the refund of that safeguard duty, anti-dumping duty, or any countervailing duty which was paid. This is what section 27 says. Any duty which was paid other than the person who was born that particular, he was not passed on the instance of tax, can file this particular refund application. This concept of this unjust enrichment. This concept of unjust enrichment is precisely tested in your examination. In case if a question is asked for refund, you can get one question, principle of doctrine of this unjust enrichment. They'll ask you to explain how this principle of unjust enrichment can be established. How you can examine that the instance of burden of tax has not been passed on. This is the only theory question for 4 marks you can expect from this particular chapter called refund. So what they say, any claim to be made by this importer or exporter. Now, importer we have discussed. Exporter. Why can an exporter claim a refund? I'll give an example. An exporter exported consignments to, say, Bhutan. Say for a moment, there is a jaggery product which has come for export. Jaggery product which was exported, there was an export duty payable. Now, once I have exported jaggery, after jaggery reached the customer premises, customer has rejected or he has returned. There could be various reasons. That jaggery which has come back to India, what I'll do, said, look, I have exported jaggery, I have paid export duty. Now, unfortunately, it was returned back my customer. I'm not going to get repatriation of money in foreign currency. I'm not going to, whatever duty I have paid, kindly permit me to claim a refund. So section 27 comes into rescue, saying that any instances where you paid an excess tax, you paid an excess duty, any instances where the burden of that duty or tax you have suffered as a buyer, you come for filing a refund application. Now, there is something called duty under protest. I'll give you a backdrop, then I'll explain you this importance. Many of you, you're going to get qualified in very shorter span once you get into the industry. This term duty under protest, payment of tax under protest, is very important, either income tax or indirect tax. Reason, whenever a tax was paid under protest, there's no time limit which is applicable. There's no bonding of the restriction of time to file an application. So whenever a duty was demanded and you don't accept the duty demand, you defend that particular duty, but you want to protect the interest exposure. Then that point in time, you pay that particular duty under protest. I'll give an example. Steel Authority of India Limited, SKF Bearings Limited case. There was a case where supplementary invoice was given. Sir, I have given an invoice of 1 lakh. After 6 months, I did a negotiation. I got 20% hike. So I was permitted to bill 20,000 extra. So when I raised the supplementary invoice for 20,000, the department demanded for me to pay the excess duty of differential excess duty on that 20,000. Assuming that 12% was the excess duty originally, later when I raised bill for another 20,000, from 12%, the duty happened to be 16%. So what government did? Praveen, since you raised an invoice for 20,000, you pay excess duty of 16%. But I say, so this 20,000 is pertaining to that transaction where the rate of duty happens to be 12%. Now there was a differential duty of 4%. Now this is a case where it went for argument where you have to raise a supplementary invoice. Should you need to pay the duty? Should also you need to pay interest? Assuming for a moment, there was a demand for that 4% duty. I wanted to protect the interest of my organization. I'm very confident that this particular money is going to come back to me as a refund. So what I will do? I will deposit that 4% to protect the interest. The moment I have deposited that duty, the interest gets sealed to that position, that point in time. So here, when I have deposited under protest, I can file a refund application as and when the respective appellate authority or a high court or a Supreme Court decides this matter, and I get a refund in my favor. Now, there is a capping. If the refund amount is less than 100, I cannot file a refund application under this particular provision. Section 27 talks about this particular mechanism when the principle of unjust enrichment is not sustainable. Examination, 4 marks theory question will come. Examine the circumstances. June 2021, I believe, there was one 4 marks question asked under GST law. No doubt, same repetitive under customs may it have in this coming June 22 or November 22 attempt. So what they say, explain the transactions where a refund application can be filed, which is not, which is in line with unjust enrichment. First point, my refund application must be accompanied by a documentary evidence to establish that I have paid the duty or interest. I also have filed a refund application for that particular amount. However, I have not claimed a duty drawback. I should not have claimed duty drawback on that particular amount paid. And I also have not passed on the burden of that duty or interest to my customer. So how do I prove this? I think Sairam asked this point initially touched upon. Whenever I say instance of that duty has not passed on, if you look into my balance sheet, if you look into my current asset, loans and advances or money recoverable in cash or kind, this money of duty, whatever I have paid as excess money, whatever I have burned the instance of tax which was not passed on, if this amount is shown in my balance sheet as current asset, that is the evidence, as a documentary evidence, as a certificate to prove that the element of unjust enrichment has been met with. Now, these are the basic aspects which one has to look into. Time limit, students, I'll just skip for want of time. Now, these are the principles called unjust enrichment, where 4 marks theory question you will expect from examination. What they say, if the importer or exporter, as the case may be, has not passed on the instance, he has used it for personal use. If the buyer has borne the duty and interest and he has not passed on the instance, so buyer has retained the burden with him. The amount of duty which is found refundable relates to export duty. As I said, example of jaggery. Sir, I have exported the goods have been returned or rejected from my customer. Even then, this principle of unjust enrichment is retained intact. Further, if the amount relates to drawback of duty payable under 74, 75. If the amount relates to drawback under 74 or 75. Now, unjust enrichment is talking not in line with your refund related process. If the duty of interest was borne by the class of persons which has been notified, the government is going to notify saying that these are the people who have paid so and so duty can claim a refund. If the duty paid in excess payment generally, like I gave example of duty con, sir, I have to pay 2 lakhs, but I have paid 8 lakhs. It is a clear-cut case on the basis of my self-assessed bill of entry. I can claim back that as a refund. Now, examination, these are the provisions which are going to be tested for you for 2 marks for unjust enrichment. So what if in case of exports, the person who has exported the goods, for him on the when he has imported, then that point in time he can get a refund. In case of imports, I should not have claimed duty drawback to file application for a refund under this particular section 26. Now, there could be cases where goods are defective and not as per specifications. Sir, I have imported a car, immediately I have returned back. I don't, there was a defect. I don't want to use that car. Then I can go for a refund application. How? There are few cases where the cost of resending is much higher than the cost of disposing. So those cases, with the permission of consent officer, I can dispose of those goods and claim a refund. I have not claimed a drawback, then I can go for a refund under this section. If I filed a drawback, I cannot file my refund application. There could be cases where I give away title to the goods, I destroy the goods at the premises, at the instance of a presence of a commissioner or the proper officer. Now, there could be cases where the customs officers say, look, these are not permissible goods. Even in those cases, I can file a refund application. Let me see if there are any questions quickly before we wind up for the day. Last question, which is there from Namita. So in case of Dell, which is a laptop imported, say Dell has sold the laptop to Priya. Namita, after import, it became Indian goods to how Priya can claim the refund of safeguard duty. Now, in this case, Namita, Dell has collected from Priya and paid to government. There was a wrong entry, 8412, it was entered as 8422. Because of a wrong act done by Dell, Priya has paid the safeguard duty. Now, having noted that it was done, now in this case, laptop was imported by Priya. This safeguard duty was not paid by Dell. So in this case, Priya is authorized to file a refund application under section 26A, saying that, sir, I have paid duty which was not supposed to be paid. So Dell cannot file a refund application. Rather, Priya has to file her a refund application. So students, we'll stop our discussion with this last topic. We're going to meet on 19th with our final topic of discussion. So till then, good night, goodbye, Jai Hind.